Hey, so here we go, Module 7, the RGA Solution. Actually, this is not the actual title of this. Now, I don't want to be so presumptuous, but the actual title is the Wiki Solution, how we beat the market forever. Okay, so before you react, I'm not uh, uh, a braggart. I'm proud about what I do in the market. This is in 2014, I guess, right? So in 2014 or something. But these are my returns from 2008 to 2000. Of course, this is, um, you know, if you will look at it, this is not an apple to apple comparison. Why? Because these are huge mutual funds. Look at the mutual funds. This is the Philippine Stock Index. Down 2008, negative 48, up 61%, up 37%. So if you will look at their 6-year return, 8% only, 5-year return, 10% only. Phil Equity, almost the same. Sun Life, very small. I managed to have a 6-year return of an average of 30% because, as I've said in my previous presentations, I wasn't in the market in 2008. I was out. So if you will notice, my investment went down in 2008, but just a few inches or so, 2.2%. My investments are not all in, so to speak. I stayed in the sidelines in 2008. In a way, you may say that I saw the gloom and doom coming because of the news from overseas. But then I had cash lurking around. So I went all in during that time because I saw that there's blood on the streets, and that's what Warren Buffett said. And so that is why in 2009, 2010, all my investments are, raked all the profits. And I would attribute this to the fact that my portfolio in 2008, believe it or not, when the market, before it dropped, the market was averaging about 15 to 20. At time it was one time it was at 22, 23 times price earnings. When it dropped, I guess it dropped the first time it dropped to around 15 or so. My portfolio, my entry in the portfolio is about 5 times price earnings. So imagine that. While the market is just going down, I'm entering very low, lower than the market. So I'm saying this because I want you to learn from that. Now we are in a similar situation. Fast forward this to 2020. I've not tracked my performance. Maybe in the future, in the next couple of videos, I'll do it. But we are in 2020. The market is, really down. And here now, March 27 or so, I'm watching Dow Jones opening in CNN down 4%, opening minutes of trading down already 4%. It has suffered a major blow everywhere around the world. So it is a perfect opportunity for us to look at it from the perspective of a long-term investing. Again, this popular question: how much did you spend on your phone? How much did you lose when you bought that iPhone 10? 51,500. But how about the opportunity cost? If you invested it in an investment that yields 10% in 10 years, that will be 133,000, almost 3 times. It doesn't stop there. If you put it in an investment that yields 20%, if there is such a thing, then it would have turned in about times 6 in 10 years, but it doesn't stop there. If you put up a show my store that returns 500 a day net profit, that's about 50% profit. That would be 612,500 in 10 years. And it doesn't stop there. So why am I saying A lot of people are saying, I don't have enough resources to put up my investment in the stock market. You do have. You can afford expensive things. When you want to buy your iPhone 10 or MacBook Pro, you can do it. I mean, you can just, charge in your credit card and you're able to do it. How can you not manage to invest in the stock market when the stock market really grows? While an iPhone 10, for example, or a MacBook Pro, don't get me wrong, I'm a fan, will depreciate in value in 10 years' time. I mean, just 5 years' time, this would be, practically zero. So think about that. So my principles are based on Warren Buffett. Buy only in my circle of competence. Buy only that which, if the market closes tomorrow and for 10 years, it will still earn for me. Buy only in which is lower than the market average price earnings. So usually when the market average is around 10, like right now, I think it's about 10 or 11 times price earnings. You can still look for investments that are, you know, trading at around 6 or 5 price earnings at this point in time. So the key there is either it has low price or it has high earnings and the price does not, has not caught up with the price. Buy only which has a peg of less than 1.00. Of course, this is too tough, but sometimes I adjust it to 1.25. Higher than 1, but closer to 1. Peter Lynch advises about two times price earnings growth. Okay, so blue chips or penny stocks. Blue chips bought at a high price is not safer. What are blue chips? Blue chips usually are company that are trading at a higher price earnings. So usually yan yung mga nasa we classify those in the index as blue chips. Yun, they command higher price kasi they're really earning. So, but if you bought the blue chips at a higher price, it's not safer than a second liner bought at a low price. It may be a second liner today, but if you bought it at a low price, then it will earn some more, better than your blue chips. So, for example, I'll give you a clear example. Usually, it happens to me all the time. Okay, so blue chips example: BPI, BDO, Metrobank. But if you bought it higher, I will buy Security Bank, I will buy Union Bank, I will buy RCBC at a lower price earnings, and your BPI will earn you 10% maybe a year, while my Security Bank bought at a lower price will give me 25% a year. That is exactly what I'm saying here. So blue chips are not always blue. Yes, this is true because sometimes a stock or a share, a company is listed in the index, and sometimes it fell out of the index. There was a time when San Miguel was there, and then San Miguel was not there, and then it comes back again. So it usually changes. So blue chips are not always blue. Penny stocks, these are stocks that are worthless. They they sell very very low price. That's why a lot of people are investing in those, but they're not worth your pennies. They have the greatest chances of turning into 10 baggers, nagmumultiply ng 10, kasi nga everybody is making use of it, speculating. But they have also the greatest chances of turning into worthless issues. Don't gamble. If you are buying penny stocks or stocks that you don't even know about, it's so parang it's so famous because everybody is drumming about its fame because they're expecting something to happen, like the Now Corporation. Okay, it is already past. Okay, safety first. This is the time when I was still using Ami Broker. There's a time what I was holding the some of my friends holding in our former school, and this is my personal 1611. As you will notice, this is the risk and this is the return. So usually if you are on the left, then you have lower risk, and when you are higher, then you have higher return. So the best is you are high, and yet you are towards the left, as with this. I think this is my 2343, my call financial 2343. Of course, this is my personal account, 60 level. Ayan po. So take care of the downside and the upside will take care of itself. Take care of your risk. Don't lose money. Okay, but wait, there's more. So the wiki principle, as I was saying, the wiki generation is on the way. The wiki generation talks about collaboration, openness, integrity, service orientation. Wiki examples. Wikipedia is a wiki example. You know about this. There was a time when you have to buy 20 volumes, 30 volumes of encyclopedia just to be able to study. Those were my times. And then in 2006, 2007, I guess, Encarta became uh, very popular. My child, Andrea, was an Encarta baby. I educated her through all these Encarta CDs and all that. But then at about 2007, 2008, Wikipedia is already making its waves. And then now, when you want to know something about something, there's Google, but then there's Wikipedia. Okay, another weak example is the Human Genome Project. There used to be a time when, in order to map your human genome, it will take you a lot of months or so, and then you will need a lot of money. Now you can do it in in under an hour or something. I don't know the exact time now, and uh, for a very very minimal amount. Tapos in I think this is in Europe. Fix My Street or in UK. You can just text or message your government, uh, and then they will fix your street, quote unquote. So usually what am I trying to say here? Online courseware, ito matagal na itong ginawa ng MIT before in the US, and then OpenU. These are examples of a wiki. You can search on all of this. Uh, Usually, when you go wiki, it's open collaboration of a lot of people around the world. So, ito yung example ng open yung sinasabi ko, open yun. No? They have free courses produced by the open universities, open and distance learning. So open learn courses are free to study. So they have 1,000 free courses across 8 different subject areas. And then if you want to get your I think exam or something, you pay something for the exam. But then all the courses are free. So imagine this school, quote unquote, doesn't have a building. Okay, so that's the Open University, and it's product of the wiki type of learning. Wiki kasi all the teachers are pitching in. They don't hire. That's why they can collaborate. They don't even need to hire professors, because the professors offer their services for free because the courses are for free, right? Okay, so imagine a world of possibilities in investment. All of us sharing information on a website. For example, there's a wiki, site, a website. All your information are there. There's no need to create noise such a way na you just want to campaign for your stock. No, it's just sharing information. Oh, I heard about this stock. Is this true? And I think this is already happening in a lot of forum, but maybe if we can organize a professional website wherein we can share information. We analyze the stocks and investment vehicles together. And usually, if it's just one person analyzing, you can commit a mistake. But then there are a lot of people. If there are a lot of people analyzing, then the chances, the chance of you get going wrong over one investment is very slim. So parang it can be a sort of like Moody's rating or something, but it's wiki. It's not being done by professional that we pay. It's done by us. Like for example, what can you say about the BPI share price now? So there's someone who would say, okay, I think it's going down. But if these are people that really study about movements of the stocks and all that, maybe some will be technical analysts, some would be fundamental, some are CPAs, some are lawyers, some have insights on the company. So we can share information. We can give opinions about the stock and cross-validate them with other members. So sometimes you can commit a mistake, or sometimes there's a deliberate effort on some members to cheat. Like for example, they bought now. Again, sorry for those people who bought that. They bought now and they want to sell now later. So they would campaign so that it will go up in value. But of course, someone level-headed in the group will say, of course, say something against such a purchase. If you have a lot of members, then you can already cross-validate. We don't get paid, but we don't pay either. So we are a wiki generation. It's completely free. We don't pay. We don't get paid. So it's like sharing your resources. So I think this is the only thing that would make us really beat the market forever. And when you say beat the market, it doesn't mean okay, we beat the market today. Like you have the market earns 10%, we earned 11, we're happy. No, it's not like that. We beat the market means we beat inflation, we beat the correct. I mean, if the GDP is up 5%, then we should be up by more than that because it's within our economy to earn more than that. So it's something like that. We need to organize something uh, that would make that a reality. Kasi the reason why I'm a bit hesitant I'm a member of a lot of forums in Facebook, but then a lot of people there are not really professionals in handling information and all that, and some are just fishing for information themselves and they don't really share, diba? So it's like it should be a master mind group. You should be able to give your opinions and give your contribution, or else what's the use of being there, right? Okay, so that's it. I just hope that I somehow managed to let you think about the way we can move forward together. This is not really something that's very novel. I think it's being done all over the world, and hopefully you can join me in this quest. So this is George. See you in the next video. Hopefully you can make this dream of mine a reality. Thank you.